Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories in corporate filings. And today we're looking at Nixxy Incorporated, and let me tell you, this filing is all about a big split, a business divorce, if you will. Before we dive in, if you love getting clear and concise insights from these dense corporate documents, make sure you hit that subscribe button. And if you want to chat more about these filings, join our Discord community. It is linked in the description below. Alright, so Nixxy Incorporated is filing a Form 8. Think of an 8K as a current report, basically a way for companies to announce major events that shareholders need to know about right away. This isn't a quarterly or annual report, it is for something more immediate. The date on this report is the 31st of December 2025. This is when the earliest event they're reporting on happened. The company is Nixxy Incorporated, and it is incorporated in Nevada. You might notice their stock has a ticker symbol Nixxy, which is pretty straightforward. They also have something called common stock purchase warrants, trading under the symbol NIXW. Warrants are like options. They give you the right to buy stock at a certain price. Both their common stock and these warrants are traded on the Nasdaq Capital Market. This tells us it is a publicly traded company on a major exchange. Interestingly, Nixxy has checked the box saying they are an emerging growth company. This means they get some regulatory perks like a longer runway to adopt new accounting rules. This is important because it can mean their financial reporting might not be as mature or stringent as a more established company. Now let's get to the juicy part. Item 1.01 is about entering into a material definitive agreement. This means Nixxy entered into a significant contract, and what is this agreement for? Well, it is a master distribution agreement. This agreement was made on the 31st of December 2025 between Nixxy Incorporated and CognoGroup Incorporated. Here is the key thing. CognoGroup is a majority-owned subsidiary of Nixxy. This agreement is essentially setting up the separation of CognoGroup from Nixxy. The plan is to distribute all the shares of CognoGroup that Nixxy owns to Nixxy's own shareholders. This is commonly called a spin-off. Nixxy is essentially saying goodbye to CognoGroup and giving its shareholders direct ownership in the new independent company. Along with this distribution agreement, they also signed a separation agreement. This is like the prenup and divorce settlement all rolled into one. It details how assets and liabilities will be divided, how existing business relationships will be wound down, and other operational tidbits to make sure the split happens smoothly and fairly. The separation agreement and other related documents will cover things like who keeps what assets, who takes on what debt, and how the two companies will release each other from certain future claims. It is a comprehensive plan for cutting the cord. CognoGroup will need to file its own registration statement on Form 10. This is a document that provides comprehensive information about the company to potential investors, a bit like an IPO filing, but for a spin-off. Now we jump to item 7.01, which is about Regulation FD disclosure. This regulation basically ensures that when a company releases material information, it is made available to everyone. At the same time, not just select analysts or journalists. On the 5th of January 2026, Nixxy issued a press release announcing the completion of this spin-off. The headline itself tells a big part of the story: Nixxy completes spin. Out of CognoGroup, increasing strategic focus, reducing operating costs, and unlocking shareholder value as AI infrastructure platform scales into 2026. This press release is attached as an exhibit. It is likely to be full of positive spin about how this move will benefit everyone involved. Finally, item 9.01 lists the exhibits filed with the report. This is where we see the actual legal documents. Exhibit 10.1 is the master distribution agreement itself. This is the foundational document for the spin-off. Exhibit 10.2 is the separation agreement. Again, this is all about the nitty-gritty of the split. And Exhibit 99.1 is that press release we just talked about from January 2026. Exhibit 104 is the cover page in a special format called Inline XBRL. This is used by the SEC to make financial data easier to search and analyze. The report is signed by Mike Schmidt, the Chief Executive Officer of Nixxy Incorporated. Now let's talk about what this all means from a strategic perspective. Nixxy is effectively streamlining its business. By spinning off CognoGroup, they are aiming to increase their strategic focus. This means Nixxy can put all its energy and resources into its core business, whether that is AI infrastructure as the press release suggests or something else entirely. This spin-off also aims to reduce operating costs. When you are part of a larger company, there is often overlap in functions like HR, finance, and IT. By becoming a standalone entity, CognoGroup can create its own leaner operational structure, and Nixxy can do the same for its remaining business. The press release talks about unlocking shareholder value. The theory is that when a company is split into focus pieces, each piece can be valued more accurately by the market. Investors might be willing to pay more for a pure play AI infrastructure company than for a conglomerate where CognoGroup might have been just one part. However, there are always risks and considerations. The success of this spin-off hinges on CognoGroup's ability to stand on its own 2 feet. Will it be able to secure its own funding? Can it compete effectively against other players in its market? And will Nixxy's remaining business be strong enough to thrive without the revenue or synergies CognoGroup might have provided? From a Warren Buffett perspective, we'd be looking at the underlying businesses. What is Nixxy's core business now? What are its competitive advantages, its profitability, its debt levels? And for CognoGroup, what is its market position, its growth potential, its management caliber? This 8K is just the announcement of the deal, not the deep financial dive of a quarterly report. But it signals a significant strategic shift. Looking at the filing, we don't have detailed financial tables here, as this is a current report focused on an event. The core story is the corporate restructuring, the planned separation of CognoGroup. The real financial impact will become clear in future filings from both Nixxy and the newly independent CognoGroup. What we can infer is that Nixxy believes its core business will be more valuable and easier to manage without CognoGroup, and CognoGroup is deemed to have enough potential to be a standalone entity. The success will depend on execution and market reception. Alright, that is our breakdown of Nixxy Incorporated's 8K filing detailing the spin off of CognoGroup. What are your thoughts on this strategic move? Do you think it will unlock value for Nixxy shareholders, or do you see potential pitfalls? Let me know in the comments below. If this deep dive was helpful, give it a thumbs up and subscribe for more. And don't forget to join our Discord community in the description to keep the conversation going. Thanks for watching, and we'll see you next time.